Hello and welcome. You're watching Business Plus. I'm Shweta Kothari. We're bringing you stories from the world of business policy and economy. First up, let's take a look at headlines. Don't be jittery. Prime Minister Modi will come back with good majority. Finance Minister Nirmala Sitharaman assures investors of BJP's return. Generative AI likely to have more impact on white-collar jobs than blue-collar. Pearson's Skill Outlook report suggests that 30% white-collar tasks can be performed by Gen AI. And brace for higher car prices. Passenger vehicles to get costlier from January 2024 onward as car makers plan to pass on the input cost. India's domestic air passenger traffic is expected to touch 155 million in financial year 24, even as airlines plan to prepare and ground 200 aircraft. iPhone maker Foxconn plans expansion in India, sets out $1.6 billion outlay to build factory. All those stories right here on Newsline. With me is Karthik Malhotra. Karthik, hi, good morning.
Hi Shweta, good morning to you.
Let's begin with the flavor of the season, and that is the elections. Impending elections, the general elections.
And flavor of this season, flavor of the next, and the flavor all through summers.
Absolutely.
And that is when we have a new government or the return of the same government.
Or perhaps not a new government.
In any case, a new regime to kickstart.
Absolutely. A new regime will kickstart, and finance ministers assuring investors, the business community, that don't worry, the economic policies that have been put into place, the ecosystem, the climate that has been built by the present government is likely to continue for the next 4 years.
I think she did not mention the word likely at all, and she said,
Prime
Minister Modi is coming back and coming back with a good majority. I think FM out there sounding the poll bugle very, very clearly at an economic event, at a business event organized by India Global Forum, not mincing her words and telling investors, and literally telling investors, don't be jittery. There's no need to be jittery. I understand that there would be jitters. I understand there would be, you would be keeping your fingers crossed in a run-up to elections. But I urge you to not worry at all. And Prime Minister Modi is coming back, and not just is he coming back, he's coming back with a good majority. So these are words coming from Finance Minister Nirmala Sitharaman yesterday evening. And amid, of course, a lot of other macroeconomic indicators that are in any case emerging on a day-to-day basis. Now, just yesterday, Shweta, if you remember, we were talking about the S&P story in India, and S&P has revised India's growth upwards from 6% to 6.4% for...
In line with the government's estimates.
In line with RBI's estimates, at least of 6.5%, still about 100 basis points, short of that.
Yes.
So, actually, so, I mean, 6.4% versus 6.5%, you're pretty much in line with what the RBI is projecting. However, I think it is looking at cutting down its forecast. S&P is cutting down its forecast for FY25 from 6.5% to 6%, but is saying that 6.5% will happen in the subsequent financial year. So anyway, I think macroeconomic data coming in line with the macroeconomic fundamentals, coming in line with growth projections that India has, has sort of led the way when it comes to all major economies in the world. And FM there, not mincing her words, telling investors don't be jittery. Now, if you remember, there were headlines last week as well, where there were some estimates that the Sensex could go as high as 84 to 86,000 levels next year. Now, some analysts and some, analysts, not just Indian, but those especially abroad, have also come on record and said that if the Modi government were to come to power, you could see markets go up by about 50%.
Could scale all-time high.
And would scale all-time high. And in case that were to be reversed, then we will see some short-term selling and we will see pressure on markets downwards to about the tune of 30 to 50%. So that's the kind of commentary which is happening right now, given that we are in election season. But
now, to put context to that commentary, that would happen if there were any government that would have been in power for 10 years and were, to go away after 10 years, because that would mean a change in economic policy.
Right.
It is not a show of faith or confidence in the present government, is it?
Absolutely. So I think markets love continuity. Markets love not getting surprises, and right now I think markets are factoring in a good probability of the current regime to continue, right? But it's still very early days. I mean, not even, we haven't even gone beyond state elections yet. In fact, state election results are likely to come out only on the 3rd of December. And after that is when the official general election season is really going to kick off. So it's early days yet, but I think markets are expecting continuity. Some of the analysts that we are speaking to, both Indian as well as those internationally, are hoping on the return of the BJP-led, Modi-led BJP government to continue in power. And there are, of course, these sort of scares of a regime change, and that could impact markets immediately. But markets is just one side of the equation. I think the more sort of reasonable side of the equation is the general macroeconomy. And to the credit of the present regime, I think the Indian economy has done fairly well when compared to all its peers, and given the uncertain environment that we've been right from COVID, and I'm just talking about the last 5 years or so, right from the start of COVID about 3.5, 4 years ago. It started in China 4 years ago. India started feeling jitters only in March 2020. And then, of course, you had the Russia-Ukraine war. Post that, now there's a war in the Middle East as well. So overall, I think India has been fairly insulated. We've also seen the bank run in the US. We've seen banks topple, Silicon Valley Bank, etc. These are large stories which have largely kept India fairly insulated and not impacted as much. But at the same time, and this is something that FM has also warned, that whatever India can do domestically, internally, India is doing, and India is doing right. But there are these global macroeconomic issues which could have a bearing on India that India may not have control over. A black swan event, of course, nobody has control over. But even if you look at the discretionary spending taking a backseat in the US, India's exports, IT exports, as well as precious stones like diamonds, their exports to the US, to China, etc., are getting hit. India's export story is not holding up very well right now, given the macroeconomic uncertainty in the world. So I think given what we know, given all the certainties and the knowns, India's growth is poised to continue. But the unknowns and the uncertainties nobody really knows of. But FM, not mincing words, sounding the poll bugle, assuring investors that PM Modi is not just going to be back, he's going to be back with a good majority in 2024.
All right. Whether that's going to happen or not, we don't know. But Finance Minister there at least hoping that the jitters when it comes to investors are catered to, are put at bay by suggesting that the BJP will come back and perhaps there will be continuity in economic policy in the year to come. But moving away to a story that is coming in by the way of generative AI and the fears around if AI is going to take up jobs and will make you jobless, if at all, what are the jobs that are going to be most impacted? Now, a study by Pearson Skill Outlook suggests that if you are a white-collar worker, 30% of your job can be done by generative AI.
Yeah, so I think it's fairly obvious, and this has now been cited by Pearson Global Skill Report, suggesting after studying over 5,000 job roles across 5 countries, including UK, US, Australia, Brazil, as well as India, that out of the 5,000 jobs, both in the blue collar and the white collar, differentiated job profiles, it's fairly clear that the white collar jobs are more at risk than the blue collar jobs. And in that, there is, of course, also a segmentation which Pearson has been able to do, suggesting that the accounting jobs and the more sort of repetitive jobs in nature, repetitive jobs and more automated sort of jobs where you're forwarding calls or, calls being taken on the reception, all those jobs are going to be very easy to, to let go of human beings and getting machines to do it.
Absolutely. Anything that is repetitive, anything that requires you to do the same thing over and over again without putting much of your brain and mind to it.
Yeah, so I think, the study also says that as much as about 30% or so of a week's work done by white-collar labor is repetitive or sort of, brainless enough in nature that a machine can easily do it. And the report compares this with just about 1%
of the blue
collar jobs. And that again, Shweta, is fairly obvious. I mean, unless you were to look at AI in the context of robotics and both these flourishing very well, can you really have a machine, a generative AI machine drilling a hole in your wall? Can you get a plumber? Can you get a mason? Can you get a carpenter, replaced with a generative AI? So we are specifically talking Gen AI. We are not talking AI plus robotics. And I think with robotics, it becomes a very, very different playing field. But generative AI, is more likely to impact as much as 30% of the weekly work done by white-collar laborers as compared to just about 1% of the weekly work done by blue-collared workers.
You know, this is quite in line with what we've been saying here at Newsline for a while now, having spoken to all the experts in the generative AI space, and that is a AI machine or AI per se may not replace you as a worker, but if you are somebody who knows how to use AI, you would be in demand.
So I think when we spoke to even Prabir Jha, you know, a headhunter, and especially somebody who has great expertise in hiring for the IT sector, staffing for the IT sector, I think the message was very clear that AI and human intelligence needs to work in tandem. Human beings need to learn AI. Human beings need to be trained on artificial intelligence and those tools to be able to do better in their jobs, to be able to perform their existing roles better and augment what they already know by use of AI. But is AI really going to immediately replace or even subsequently replace human beings? That still seems, you know, like a fairly large distance to go before something like that may or may not happen. But I think AI and human working in tandem needs to be the formula. You need not be 100% dependent as companies or organizations on human beings. Their work can be augmented, made more efficient, lesser time, lower cost by using AI. But then that also gives human beings a chance to upskill, and it gives the human staff at at any sort of white collar jobs to not do the mundane, rudimentary, repetitive tasks and use that time better to perform tasks which are far more valuable to the company than something that a machine can do.
Right. So skill, reskill, upskill, if that is the mantra going forward, if you are to sustain and find yourself employable in an AI world, perhaps in the year to come. But we're going to move on for now. An important story that is coming in by the way of passenger car and Maruti's passenger cars specifically, where we now know that they're going to get costlier from January of 2024 onward. We have Shashank Srivastava, Senior Executive Officer, Marketing and Sales, Maruti Suzuki, joining us on the show. Shashank, thank you for taking time out this morning. Good morning. I want to first begin by asking, what sort of impact are we looking at on consumers? To what extent are the cars going to get expensive, and in what all segments?
Yeah, so first of all, I think the price hikes which we will be doing from January will be across the board. That means almost all models of ours will be affected by the price hike. Some of them will be affected substantially, though. However, the exact quantum is still being worked out. So I will not be able to give you a guidance on the exact quantum of increase, but it's going to be across the board.
Okay, and which cars are getting more expensive? Because you said some of them will be expensive substantially.
Yeah, so I think it really depends on the cost structures, which we have been actually the decision for increasing the price always is the last resort for us. We try to do cost control and cutting before we finally get to the point where we have to increase prices. Different models obviously affected differently. Larger models as well as some of our hatches, they are also getting affected. And it's largely because of the commodity prices, volatility, in general inflationary pressure, and also steel prices, which have been going up in the recent past.
Shashank, hi, good morning. Is it really fair, and I've asked you this question before and I'm going to repeat myself, is it really fair to pass on all these cost increases to the customers every time simply because there is that huge demand of buying cars, and within cars also SUVs have sold in excess of 1 million units. So not just yours, this is across the board. But is it fair to always pass on any sort of rise in input cost back to the customer when any reduction in input cost is never corrected by automakers like yourselves?
Yeah, it's a great question, and we also keep debating that. Of course, I must tell you that if you look at the last 3 years, the increase in costs have not really been passed on, and the reason why we haven't done that is because as market leaders, we are also responsible for the general volume levels in the industry, and we are very mindful of that responsibility. So if you look at commodity prices, for example, in 2020, steel was at 38, it had gone up to 84. You had copper at around $5,200, went up to $10,400.
Yeah.
Same trend in aluminum as well. But we never passed on those type of cost increases. Remember, material cost is about 75-77% of the overall cost structure of any auto OEM.
Shashank, I'm just looking at the Q2 earnings of Maruti, and that is up on the screen right now as we speak. We saw that while revenue had gone up about 20-23% or so, the net profit for Maruti in Q2 went up as high as about 80%. So then obviously when you're doing more sales and you're getting in more revenue, there is this play in between which is adding to great profitability, which I feel could sometimes be passed on to customers, isn't it?
Yeah, so as I said, we are very mindful, and that's the reason why Maruti Suzuki is most competitive when it comes to prices, and it's not just a this year's phenomena or last year's phenomena. We have we have been really, in terms of prices, really competitive globally, I would say, for the last 40 years. So and also you have to look at, when you look at those figures, you have to obviously break it down by various segments of incomes, including other income, which is income from investments or spare parts, and then you have to take it out, the new vehicle sale income separately. That would show you a different picture.
All right, and Jan is when you're saying the price hikes are going to actually kick in. Yes. But that in any case is usually the regular phenomena, right? Because you don't really want to keep stockpiles at showrooms ahead of the new model and the new year really rolling out. So in any case, I think December is when you want to offer more discounts and dealers want to offer more discounts, and the price hike in Jan is usually in any case meant to happen. But this year itself, you have increased prices already in the month of April by about 2.5%, and prior to that I think there was a little under 1% price rise in any case done by Maruti. So are we going to see more of these seasonal fluctuations, not just restricted to the month of Jan alone and Jan onwards, but every quarter are we likely to see more such increases?
Yeah, so first of all, let me correct you that this year we have increased the price only once, which was in 3rd April. And the quantum of price increase was not 2.5, it was 0.8%. And as I said, we are very mindful of increasing prices. It's a last resort for us. We never wanted to disturb the volume momentum which we were seeing this year. And that's why, if you look and compare across the industry, Maruti Suzuki's price hike of only 0.8% is actually the lowest. So we are very mindful of that. And talking about the timing of January, normally speaking, January is a good time for some of the reasons that you mentioned. Of course, consumers don't want to take stocks of the previous year's model year. There is this, psychological barrier to that. And that's why that's also translated in the inventory levels trying to be built down towards the end of December by the channel partners. And that is why you see December generally is a month of low wholesales from the OEMs. Nobody wants to carry large stocks, and also higher retail stride through higher sales promotion levels. That's true. That has been true for the previous years, and not necessarily for the last 2-3 years, because last 2-3 years we have seen supply side disruptions because of semiconductor and previously because of COVID.
Okay, and while you're here, Shashank, we can't miss the opportunity to ask you any new models that we can expect in 2024. We know your EV range is going to kick off in 25, but in 2024, are there new variants, new trims or new models altogether that we can look forward to? Because 2023 has been a fairly stellar year. You've had the Jimny, you've had the Invicto, and you've had the Fronx, but prior to that, of course, you had the Grand Vitara. But are we expected to see some launches in 24 as well?
What exciting things are coming out of Maruti's stable? I think that's the question that we want to know at this point.
Yeah, so 24-25, you will see obviously new models, and EV will also come in 24-25. We work by the financial year basis.
Okay.
And yes, in terms of, while I cannot really reveal the exact details of the new models which will be launched, but I can tell you that if you look at our history, we have been very, very bullish about introducing new products, and that's the reason why we have the largest portfolio of models and brands in the industry today.
Right. So don't give us exact models, Shashank, but do give us what segment of EVs are you going to enter into first?
So EVs will be into the mid SUV segment.
Okay.
It's like EX. You would have seen during the Auto Expo, we displayed not a proto, it's a show model of that vehicle. And we are very much on course, and as per plan, we'll be launching the EVX in 24-25 financial.
Okay, and give us a hint of what you're likely to price it at. What is your competition? Don't give us the exact price, but that would compete against which existing models in India?
We are working out the prices, though, so I can't really tell you what the price would be, but I can tell you that we'll be going to be very, very competitive.
All right. Shashank Srivastava, thank you very much, sir, for taking time out. Thank you for joining us here on Newsline.
Thank you.
We're going to move on for now from, perhaps travel on the road to travel by air. Domestic air traffic is not going to go down anytime soon. In fact, a report suggests that it is expected to reach 155 million passengers in financial year 24. Those numbers are big, substantial, especially when you compare them with what's happening, the turbulence within the airlines, and the fact that more of them are getting grounded. Go First is not going to come back. About 200 aircraft are also likely to be grounded next year.
So don't sound the death bugle on Go First just as yet. They have a little under 90 days, about 85, 86 days still to go. But yeah, Shweta, I think 155 million passengers, we've already breached the pre-pandemic travel scene in the country, and there are more number of flyers who are taking back to the skies than we saw in 2019, and that was really the benchmark, to map the industry's recovery. But these 155 million passengers coming on the back of, according to CAPA, about 200 aircraft likely to be grounded next year. And these 200 aircraft that will be grounded are excluding the already grounded 54 aircraft fleet of Go First. So if you were to knock off Go First also off the aviation skies and look at just the existing players, you have 200 aircraft likely to be grounded next year, out of which almost 45% or 90 aircraft are likely to be Indigo, whereas the balance of about 25-30 aircraft each will come from the stable of Tata, Vistara and SpiceJet. So this is a real mounting trouble right now, even though at one end, Campbell Wilson has announced that Air India is going to acquire on an average one new aircraft every 6 days, and the entire order book that it has placed of 470 aircraft is likely to be fulfilled in the next 18 months. But until those aircraft arrive, you're looking at a gap in the capacity of airlines to carry passengers. So while passenger traffic is likely to increase, you have fewer number of seats available because of the grounded aircraft. And that math is just going to tell you that prices are going to shoot up. There is going to be higher demand by way of this 155 million passengers, but there are going to be fewer seats to fly passengers, to their destinations using aircraft, because very few aircrafts are likely to be up in the sky as the ratio as compared to those that are grounded. So overall, you will have a situation where there are fewer seats available, fewer carriers with one already knocked off or likely to be knocked off, like you mentioned, and more passengers taking to the sky. So obviously the pressure on pricing tickets and making tickets more expensive will obviously be there. So while it's an opportunity for the carriers, I think for passengers looking to fly domestically at least is going to become far more expensive.
All right, not looking good, at least for passengers for that matter, but that will not be deterring them, because we've already breached the pre-pandemic levels. We're reaching about 155 million by next year. That essentially means people are going to take to skies whether our tickets are expensive or not.
So I think those who have to travel will travel, right? So if you're traveling for work, if you're traveling for emergency, if you're traveling for education, if you're traveling on a schedule that doesn't permit you to take any other mode of transport, obviously you will travel. Will you travel as much for leisure activities? I don't know, depends on the size of your purse and the deep pockets that you may or may not have. But whatever said and done, if you're looking at record number of flyers and you're looking at almost a record number of grounded fleet of aircraft, then there is going to be an obvious pressure on prices.
Obvious pressure on prices, essentially meaning that it's going to get more expensive next year if you are hoping to take a flight. That is, of course, a function of math, just not enough airline, just not enough aircraft, and more passengers taking to skies. But before we close this bulletin, very important story that is coming by the way of India's made in India ability and iPhone betting big on India. We know that it's not just Foxconn, it's other, it's other facilities of iPhone maker here in India who are also betting big on India as to how much will they make, how much will they export out of India. IT Minister Ashwini Vaishnav was in Wistron facility owned by Tata Group yesterday and has said that majority of iPhone that are currently being used abroad are going to come from India, Karthik.
So look at the whole timing, Shweta. I think, this also coincides very well with Foxconn betting to invest another $1.6 billion in India. Remember, Foxconn has been invested in India since 2015 in its plants in Maharashtra. Now, it has already put in about $8 billion in India, and now this commitment to add another 1.6 billion just shows its own commitment to move out of China and move into India. So I think this whole China plus one strategy, especially when it comes to manufacturing of electronics and within electronics, manufacturing of smartphones, and within smartphones, the manufacturing of iPhones is one story which is really playing out very well for India. So the fact that you have the largest iPhone maker in the world, which is Foxconn, now doubling down with another $1.6 billion in India. Plus, with that, you also had two more companies, out of which one, namely Wistron, has now been bought by the Tata Group, is also looking at further augmenting its own iPhone production. Remember, in the case of Foxconn, 50% of Foxconn's total revenue comes from Apple. So that's the kind of strong hold it has on making Apple iPhones. And we've seen within India, as in the rest of the world, barring China being the only exception, iPhone sales are now, and iPhone exports as well as iPhone sales are reaching new record highs every every month when data comes out. So it's fairly obvious that India's smartphone manufacturing capabilities are getting doubled down on. India's overall electronics manufacturing is a story that India is beginning to write, and this whole China plus one strategy, with the plus one being India, is now becoming fairly obvious, especially again in the context of the TIF, the trade friction between US and China, especially when it comes to social media, when it comes to AI, and when it comes to the chips, the semiconductors that power, the GPUs that power that AI revolution. So that fight is on, and in that fight between US and China, India seems to be the winner right now.
Okay, that's an interesting analogy. My colleague Mohammad Wajiullah also joining us on the show. Wajiullah, thank you very much for taking time out. IT Minister Ashwini Vaishnav was in Bengaluru yesterday, slew of announcements made, but I think what stood out for me is he said 99.9% of the smartphones currently being used in India are made in India.
Well, yes, that is the statement that the IT minister had given yesterday when he had visited the iPhone plant at Hosur yesterday. And I would not be able to deny what Karthik said, that yes, India is gaining with regards to these big companies coming into the country. Is also because of the CHIPS Act. But coming to what Mr. Vaishnav said yesterday, that 99% of the phones are made in India, was a political dig that he's taking. But he also did not just take a dig, he gave out facts saying that today all the phones that we are using, be it a Samsung phone or be it the Apple phone, it's all been made in India. Your Chinese companies are setting up firms in India, and with Foxconn coming too is also a big indication. But if we see the facts that he's put out on the table, is that in the coming few years, India will be taking up close to 28 to 30,000 jobs because of this new investment that is coming from Foxconn. We are also seeing the market expand from Bangalore to Tamil Nadu. There's another setup that will be going to happen in Tamil Nadu, is also what the minister also hinted at. And all this is also going to help the Apple industry, because Apple in the last 7 months of this financial year has seen an exponential growth of 177%, where it has seen 5 billion exports of iPhone from India alone. So this makes India a bigger market for iPhone export, and we have already beaten Samsung, which was 43% last year, and today, this year, we see Apple taking being the largest exporter from India. So India is becoming the largest exporting hub for smartphones around the world. And with what is happening between Washington and China, with the new CHIPS Act that has been passed by the Biden government, we are seeing India cashing in on this. We're seeing a lot of semiconductor companies making their way to India. And with Foxconn coming, like Karthik said, this is just the beginning. I think we'll see more and more companies coming in the coming years or coming months.
And you are standing currently in the hub of all of that, which is Bengaluru. All the factories around you in Tamil Nadu, in Hosur, are likely to come up in next couple of months from now. Vajula, thank you very much for taking time out for joining us here on the show. And with that, it's a wrap. Thank you very much for watching.